This week's trades, market movers, and technical levels that count, wrapped up with clarity and precision. This is Weekly Wrap Up with Verified Investing.
Hey, everybody. Welcome to the Weekly Wrap Up. Of course, I am Gareth Soloway, Chief Market Strategist here, and we're going to deep dive into the wild week that we saw. Big down days on Wall Street, big economic data released, and I think that's what's so concerning. If you're a bull, you got a great jobs report, the markets got crushed. You got a great CPI data today, and you didn't rally. You basically closed flat. In other words, you're seeing momentum potentially stall out here, and the data is not triggering new buyers, or at least not enough institutional buyers to get things going. And that to me spells one thing: next week, watch for downside. Now, the charts are confirming exactly what I'm talking about. We'll get right into those right now. Let's go to it. If we take a look at the S&P 500 chart, this is your intraday. So when all was said and done, markets basically closed flat. We opened the day slightly lower, we floated higher, and then floated back down into the end of the day. The more important chart, though, is right here, folks. So number one, the bigger parallel continues to cap the upside on this market, right? You have your major COVID low, right? You have your major bear market lows right in here, all along this trend line, this lower parallel. And then last but not least, you have your liberation sell-off low, then the highs of the bull market. And then ultimately, what did we tag? We tagged that. And as I explained today in the game plan, this is exactly what it looks like, which is distribution. Institutions selling in to retail, which is levering up, and the markets then break to the downside, retrace, and are now forming what we call a head and shoulder pattern. Let me show this to you here, folks, because this is an ominous chart pattern. It has not triggered yet, so that's number one, important. But look at this: shoulder, head, and shoulder. And ultimately, the low of today, look at the low of today's trading day. We draw a flat line underneath. Essentially, this is called the neckline. And the low of the day today was right into that neckline. We did bounce off of it. So at least for now, you have not broken this bearish pattern. But this is bearish pattern among bearish patterns. And I think that's the scariest thing for me as a technician, to look at something and say, listen, there's not a few bullish and a few bearish patterns. It's just like all bearish right now. And again, when you say, well, what does he mean? Well, we talked about the head and shoulders, but then you also add in this white trend line, which we've broken down below. Then you add the parallel upper trend line, which basically caps the upside on the markets. And for me, at least, you trigger here on a break below, let's say, basically 6790 on the S&P, and you have a downside move at least to 6,600, maybe even 6,500, probably within days, folks, within days. Now, NASDAQ is even worse, right? So the NASDAQ closed down almost 0.25% today. So again, let's keep this in mind. We got great CPI data this morning, 1/10 better on the month over month and the year over year. All right, that should mean the Fed can cut interest rates, no big problems. We also got a jobs data point, which was strong. Okay, so the economy's great and the Fed can cut rates. What could be better? The market should be screaming to new all-time highs, and it's not. And that's where you have to read essentially the breadcrumbs, right? And ultimately on the S&P and the NASDAQ here, we've broken this trend line. The NASDAQ now, again, is essentially close to breaking this low. We actually went lower intraday, but it really has downside to 2180, 21,800 written all over it. And for me, and I've been saying this since the beginning of January, folks, and listen, I'm staying consistent with it. We'll find out if I'm right or wrong. But ultimately, for me, this is where I've been saying since January started, the market is headed. And ultimately, I think it's even going to go lower, but you'll get a major bounce off this former pivot high from 2024. Now, the Dow, I was stringent on this. I said, listen, 50K break puts in a top. We had a trend line here. Up it goes. We put in a topping tail. This is a bearish topping tail right here, a signal of selling. Look at how the subsequent days each tried to break above it, right? 1, 2, 3, and they failed. And on the third one, path of least resistance. You know what this looks like? It's a very similar, and this is the beauty of it. If you go to Bitcoin, right? Bitcoin's daily chart. Let's go to in fact, we'll go to the weekly chart. Here's a trend line on Bitcoin. Major resistance. This is why I was able to call the top back in October, because I was just honestly looking at this trend line. And I noticed that literally every bull market since 2017, this trend line had not been breached. So path of least resistance, right? Probability, right? So what I was looking at, and this is where I draw it in comparison to the Dow, this is a hit of a trend line once, twice, three times, path of least resistance, down it goes, right? So if you go back to the DJI, the Dow Jones Industrial Average, and we go to the daily chart, right? Once, twice, three times, big downside move. This stuff repeats over and over. That's why technical analysis is so advantageous, is because not that it's right all the time. It's not. There are patterns that fail. There are things that, again, it's probability based, but things repeat over and over again. So once you get accustomed to seeing this stuff, you start to say, okay, now I know what the odds are here. And really, that's what this game is all about. If you want to make money consistently, you just have to be right a fair amount more than you're wrong. You'll never be 100%. I certainly am not, but you have to hit it essentially a 70% win rate. That's the goal. All right. US 10-year cratering, one of the biggest down weeks we have seen in the 10-year in quite some time. The US 10-year now at 4.05%. This was a bullish breakout that failed. So we talked about failure, right? So you had this area right here. We continued to hammer on it, right? Rejected all along here. It broke out and then it failed. And from failures of patterns come big moves. And I talked about this in the last couple days. Failures create big moves in the opposite direction, and that's what we're seeing. I think the 10 years likely headed down into this 4.95 level, then we'll start reevaluating. But ultimately, again, a major breakdown on the US 10-year. Now, again, you could say, why isn't the market rallying on this? Because 6 months ago, we would have been off to the races. The market would have loved this. The answer is simple. The markets didn't believe the jobs data. They didn't. All right. They basically said, nope, that's fake news. And you know what is real is the economy is weakening. Now, which one's going to be correct? We'll find out over the coming months, obviously, as we get more data and we see how the economy goes. But the yield falling is not positive, because if it's because the economy is stalling and headed towards recession, what do you think is going to happen to earnings? Are earnings going to be really, really great if we're in a recession? No, they're going to suffer, which means multiples in the stock market have to come down. The PE ratio of the S&P has to come down. And that's where we are right now. All right. Again, we'll find out in the next couple of months what ends up happening. All right. Other charts. Look at the drop on Apple the last few days, guys. By the way, I was able to nail this high on Apple. Look at the sell alert. This literally I had up back in November when we hit this. I said, guys, this is a no-brainer. You can go back to that episode in the game plan when we were up into this level. I told you guys I shorted this. I said, listen, who am I to reinvent the wheel? If the low end picked every low and the high end picked the last two major highs, then Apple, who am I to think differently? That's going to be a major high. Look at the drop that incurred. I did cover my short down here. Then look at the bounce, and then we're starting to come in. I think this dotted trend line will get a small bounce, and then we're going to break lower and eventually head down to the low 200s on Apple. But talk about nasty looking charts. Like look at Microsoft. Microsoft hit a major gap fill, and it bounced, and now it's almost right back down. This is not a bullish chart, right? These are the mega caps. These are the $4 to $5 trillion market cap companies out there, and their charts look, honestly, like junk. They're horrible. And that's just a precursor, in my opinion, to a bigger rollover coming. Now, will these stocks get bounces? Sure, just like the market will get bounces. But these charts are nasty. Look at Google. Google's one of the stronger ones here, but even this has broken a key upsloping trend line and is now trading around 305 after being near 350. Amazon coming down. Look at the drop on Amazon. Here's your key gap fill. This is going to be your first big technical test on Amazon. 193. I may play it as a quick swing trade long next week. I'll reevaluate early next week, depending on what I'm seeing in the charts. Meta, remember a few weeks ago, Meta had those amazing earnings. The stock gapped up, right? So it closed here the day of earnings, and then earnings came out after hours. The next day, it had this great gap. Look at where it's trading. It gave up the entire earnings pop and is now even lower. Where is it coming? right into this major trend line. Will this hold? We're going to have to watch and see. But I'll tell you one thing. This is not the type of reaction in Meta that you would have thought based on those earnings. Well, granted, it's something that I would think because I've been bearish on the markets. But again, in general, that's surprising to many people. All right. So we know the internals are not good right now. All right. Stocks are not generally hitting new all-time highs. There's a few groups, again, the memory chip stocks, they've held relatively strong, not really making new all-time highs, but they've held up. The defensive names have done very, very well. But again, defensive is not what you want to see. Remember, I was beating the drum heavily on names like Kraft Heinz, Pfizer. Look at what those are doing, right? So KHC, look at this. I had this beautiful breakout and consolidation right here. Boom, starting to look better. Pfizer, look at this. It's just breaking out here. All right, we can get rid of that trend line. Look at this major level and look at the chart. So again, defensive names are the name in the game right now versus the mega caps. Now, listen, at some point, the mega caps will bounce, no doubt about it. These will pull back. But again, if we are going into an economic slowdown, then the defensive names will do better. Flipping over to gold. Gold had a bounce today after a pretty big down day yesterday. Nothing's really changed for me in the chart of gold. We still have resistance right here, and we have our support level down here. All right. So again, down day yesterday was pretty sharp on gold as well as silver. Today, we bounced back a little bit. We still haven't taken out resistance at 5,100. If you do, you head up to this level at 5,400. Silver had a very weak bounce. Big down day yesterday. It bounced today, but that's not a strong bounce. Very, very weak. If it breaks 70 to 71, we're headed back to my ultimate target of 50 to 54. That will be your next key level to watch if this 70 to 71 level gets confirmed below. All right, let's quickly look at oil. We'll get to Bitcoin, which was one of the rare bright spots today. Oil today, flattish on the day. It's still holding relatively strong, but if the economy weakens, you got to be careful with oil. It's just the nature of the beast, right? So you've had a great run in oil here, but, and by the way, this was one of my issues with the CPI data today. It showed that gasoline prices were down in January, yet oil was up 15%. All right. It is what it is. But again, I would just be questioning that just a little bit. But again, whatever it is, it is. Natural gas here, guys. Here we have a slight down day, nothing new. Now let's go to Bitcoin. Bitcoin was the bright spot today. We talked about it earlier because of that multiple hit top call that I had made. But look at this. Here's your reversal candle, inside bar, bullish consolidation. And now we're pushing up. Bitcoin, nice day today. And again, to me, micro pattern. So listen, the macro on Bitcoin is still bearish. The bigger pattern, like if you zoom out on the chart, it's definitely still in a downtrend. You still have a head and shoulders that tells us it's going lower. But at least in the short term, you could be due for a relief rally on Bitcoin. And the target here on this would be basically back to 80 to 85,000. Once we're there, it's going to have to prove itself. That's going to be a brick wall right there that bulls will have to fight through. But again, at least until there, I will at least remain bullish on Bitcoin. Now, last thing to mention on Bitcoin is that how would this bear flag fail? Any daily close below this low, the pattern fails, and watch out below. So you always want to be recognizing what your downside risk is if you're going to have a stop, whatever you want to do. But ultimately, the pattern near term is bullish for a move up here, but it fails if we take out this low area here. That would be a failure of the pattern. All right, guys. So listen, the charts, we had economic data this week. We had some earnings, but really the big mega caps are over till NVIDIA comes up in a couple weeks. But at this stage, we're looking at a market that is hanging on by a thread and likely has already topped out. Let's see next week. Monday's a holiday. What happens next week when we come back from the President's Day week holiday day off? We'll be watching. And of course, in the game plan on Tuesday morning, I'll be updating you with my latest forecasts and technical analysis. Go have a great weekend, everybody. Thank you so much for tuning in. I'll talk to you soon. Take care.